Hey guys, today I'll be breaking down 5 forex pairs. This was a request by one of my subscribers, and I promised to drop a video today breaking down 5 different forex pairs. So stay tuned and please subscribe to my channel if you have not. I'm just starting out. I need your support and encouragement. And what we do on this channel is we trade forex and volatility indices, and the strategy we use is support, resistance, break and retest of horizontal levels, pure price action, and we keep it really simple here. So if you haven't watched my previous videos, you probably should, and you might pick one or two out of it. Okay, so let's start off. Let us pick any random pair to start off with. Let's go with, let's take Euro AUD. I don't know. Let's just take it. I'm just choosing at random here. So let us do analysis. So here, guys, the drill is first you open your charts. Whatever pair you want to trade, whatever currency pair you want to trade. Let me clear all of these, guys. You know, I always do my analysis even before I sleep. I just do it and keep. Let me clean this up. Oh, fuck. So yeah, you come on the 4-hour time frame. You look for horizontal levels in the market that have been broken and retested. So that is where you're looking to trade off. I always say this, the 4-hour is the best time frame for support and resistance for price action. The 4-hour is really good because it is quiet and it is clean, and it also shows you the wider picture. So you should pick the most obvious zones in the market, and you should know exactly what to look out for. So here we can see that the market was in a downtrend. The market is in a downtrend, giving us a series of lower lows, lower highs, lower lows, and lower highs. So right now we know that our bias is sell. That's all we know because we're on the 4-hour, and this is a lot of volume. We don't trade off the 4-hour. Step one, okay, let me give you guys a step. Okay, you draw the levels out, levels in the market where the market rejected impulsively. You have impulsive rejections, you have break and retest of those levels that are very clear to the eyes. You know, there are always other levels here, but the levels are really very obvious. You mark the most obvious levels on the 4-hour. You step down on the 1-hour and watch the markets and wait for a rejection on the 1-hour. An engulfing, a black candle or an entry signal will be on the 1-hour. That's where we enter. That's our entry time frame. The 4-hour is to mark our levels. Okay, with that said, I'm seeing a level here in the market. I don't know if you guys have seen it. We can draw this out. We can draw this out as resistance. In case the market comes right up here, we're going to look at price action and see if we can grab a sell, because this market is in a downtrend. So our bias is sells. Okay. We also have this level here that's been tested. 1, 2, 3. It's very easy to see. So it's very easy to spot, guys. If you keep doing this every day, if you keep watching my videos, you just realize that this thing is very, very easy. You just do this and you probably go do something else with your time, set an alert or something, or I don't know, and you come back to it, wait for a rejection on the 1-hour time frame, and boom, you have a trade. So yeah, that is it. Okay, guys, we can draw these levels. We can see that this is also a strong level here because the market got here and rejected powerfully and even took out structure here. So I think this level here will be a good resistance. Now that the market is below it, is resistance. If the market was on top of it, it will be support. So right now we have that level to also look at. Remember, these are prices as zones in the market. It's not a particular line that the market will go and tap and reject to. There are zones. That means there are areas in the market where price reacts each time it gets there. You feel me? The price got here, reacted, and then broke it this time. Maybe you come back here to retest it since we are in a downtrend. So if the market pulls back in here, now that the market is below here, below this level, we are looking for what? A retest of this level and a continuation to the downside. We are not buying. Okay, we can only buy if the market has taken out these two levels here, and and it has gone deep, high, deep. Oh, don't just take anything. Then pull back now and reject. You know, this is 4 hour. If you go down to 1 hour, we can grab a quick scalp. We can grab a quick scalp. That's the only this is the only condition that is, if it's met, I can buy this market. But right now, 70% bearish. Okay, so if this market pulls in here, I'll sell. If it pulls up here, this is even better. This is a better zone. Okay, sorry, my alarm. This is a better zone to even sell off, because if you draw the Fibonacci, you see that this zone is just below the golden, is just below the 50%, which is good. This is a very good zone. If it pulls up here too, I'll be looking for a long sell. I'll say these are the three basic things that these are the three ideas that I have for this pair, Euro Australian dollar. So let us go now to the next pair real quick. No time to waste. You all know the drill, you know the rules. Firstly, we go on the 4 hour, we map our levels, then we go on the 1 hour and wait for a rejection. We get in our trade 1:2, and that is it. So let us take another random. Let us take AUD NZD. Okay, here we are on AUD NZD. I see a very, very bullish market here. So oh guys, my levels are always there. I always draw them. Let me take it out. Let me take it out, guys. I'm pretty sure you guys have already seen all the answers. There was one time where they were teaching us in class. The teacher was giving us an exam when we had our textbooks with us. All the questions were inside. Before he realized, I'm like, oh damn, this kid. That's exactly what has happened here. But anyways, let's take it from here. This is Australian dollar, New Zealand dollar. Very easy, very simple. We don't have to come here and start breaking down chart and start reading stories and start looking at fundamentals and going up and going down. Okay, what we want to see here is a break and a retest of horizontal levels in the market where the price has rejected twice with a strong push. That is where we want to be looking at. So here we have a first tap, we have a second tap, third tap. If you were here on the fourth tap, you would have taken, because why? The market has rejected this level impulsively. It has broken this level, come back to it, rejected it again, validating this level. It's a break and a retest. It is a top and it is a bottom and a top touch. Meaning, if you watch my other video, I said it like 2 touches from below and above. Meaning, as it has touched it under, broken it, touched it again above. That zone is a zone you don't want to play with. That's your VIP zone. It's your VIP zone. I say it in all my videos. Okay, if you were here, guys, look at this. Look at this. Wonderful. Wonderful. Okay, so we have this level. You see I drew the level right here because it's a very strong level. If the market comes back there, even if it's next week, I'll take a trade. So here we have another level. We can see this rejection here. We can see how price has formed here. This is the origin. This is where the level originated. This is the origin of this level. You can draw it out like that. No matter how thick it is, guys, you know that it's just a zone. We're just waiting for a rejection once the market enters in it. Okay, so we have a zone there that's been tapped here, broken, retested here, validating it. So here we have it here, and here we have it. But now that our bias is bullish on this market, we don't want to be looking for sales. So if you know that your bias is bullish, why are you looking for sales? So since we had a tap here, and a breakdown here, people want to sell here because it has broken and is retesting it. But if your bias is if your bias is bullish, okay, you're looking for buys. You're looking for buys. So you come here, you draw these levels, you put them out. You're waiting for a break, a tap here, a rejection here, maybe break this structure and keep going until the market has taken down this structure here before we say, okay, let us look for sales. Okay, so here we are bullish, completely bullish. We should not be looking for sales. So here I see another level here. There was a very strong push here, but I'm not interested in this level because I need to see the second tap in this zone. I need to see the market push away from this area here. Then maybe the third time I might take it. Okay, your level must be tested twice. That's the rule that I've been singing since. Your level should be tested twice, because people come here, oh, this is a level, the market rejected. I'm waiting for a sell here. Guys, you're finished. You're so finished. So These are the levels that I'm seeing here. These are the main levels that I'm seeing here. If you step down the 1 hour, you still see tiny levels that you can grab quick scalps there. It is the same thing. It applies on every time frame, but the 4 hours is better because you see how clean it is. If I go down on the 5 minute, you won't be able to see anything here. Wicks everywhere, some kind of guys. You don't want to do that. You lose a lot of money there. People lose majority of their money on smaller time frames because they don't have patience to wait. So if you can wait, you can wait, you can make money. Let us go to the next. Let's take AUD JPY. I don't know. What should we take? What should we take? CAD JPY. Okay. Um, CAD JPY. Here we are. This is the CAD JPY chart. First thing, well, we mark our levels on the 4 hour. So which level can we see here, guys? Just looking at this chart, you have 2 seconds to react. I want you to draw it. Where is the first level you can see here? Because it's a very obvious level. Even a blind man can touch the screen and feel it. This right here is a good level. It's a perfect level to trade. You know why? You know why it's a perfect level? Because the level was formed from above, broken, then now we are under the market. And the market is overall bearish. Overall sentiment of this market is bearish. If you keep scrolling, I don't want to waste all of your time and start going back to check. It's bearish. You feel me? You can go on your phone or your laptop and check it. It's bearish. So if the market has stopped here once, twice, we didn't buy it because we know we're looking for sales. When the market breaks, now what's stopping us from selling? Nothing. We just come on here as the market has entered here with this blue candle. We go on the 1 hour peacefully and we wait for one engulfing candle. One. If it's not engulfing, just one black candle to say it's time to enter the market. You understand? Good. When we see that candle, pop, we enter there. Our stop loss just above the zone. 1:2. We're not even looking for all of this move. Just 2, just 1:2. This is the easiest risk to reward. It is easily achieved. You understand? Don't take big. Even if you took the trade here, even if you bought here, you would have still made money because 1:2. If you take here, put your like on the 1 hour, you see on the, if you go down to the 1 hour, there's an engulfing candle here. If you take it, you see that your target will be around here. Self, you made money still. You see that's easy, but if you're looking for 1:6, here you lose money. Here you lose money. So it's easy to achieve. That's why I'm going with 1:2. So that way you can quickly compound your account. If you start off with a $100 account, you can start compounding by risking $10 per trade. That's 10% of the account. You start risking 10%, you make 20%, 10%, 20%. When you get to $200, you keep risking 10% till you get to $1,000. Then you can step it down to 1%. Okay, let's go. So here we have this level. This level still stretches across here because the market still had another rejection here. You know, support and resistance levels are levels in the market where the market has made major reversals off of it, because here we have another reversal, meaning all of this is a zone, and if the market gets there, we'll study price action and see if we can get a trade. So which other level can we find on this market? I'm not a trend line trader. I don't really do trend lines because I see there's a lot of traders who trade trend lines and they do it well, but I don't really do trend lines because I see a trend line here. But no, okay, I will not advise anybody to go for trend lines. No, I don't. And this level here is not well aligned. You see it's broken here, it formed here, broke, from here, broke. So the market is really strong bearish. That's why it keeps broken structure to the downside. So let's not give a level to the market that is not there. Let us take what we are seeing. So here I see this level, this tiny level here, that has formed and broken, and the market is below it currently. So what I want to see now is this market should push more to the downside, then comes back here for a retest, then I'll sell it. Okay. Okay, as you can see here, we still have another trade. This low has been tested here. You see how thirsty the market is. The market just came right up here just to drink water and go back. That's all, just to drink water from this level. It's easy to know where the market reversed. You can just draw these levels. Then you wait for a rejection in smaller time frames. Probably on the smaller time frame, there's one black candle up here before the big push. You get in. Or if you miss it, no problem. At least you saw the level. It's very important, guys. Let's go to the next pair. Next pair. What should we do? What should we do? What should we do? What should we do? Have we done Euro GBP USD GU? Let's do GU. Let's do GU. Okay, here we're on GU. G is a little bit choppy to the upside, which is good because it even forms more levels for us to trade off of it. Okay, let's go. Let's do this. Let's do this, guys. First off, let me clear out every tiny. Well, let me clean up this chart. I don't like it messy like this. Okay, guys. If you've watched the video this far, you should leave me a like, guys. Please like this video. Like this video. If you don't like this video, I will not be able to get up and feel like making videos anymore because I don't sell courses. I don't have any mentorship, any telegram. If you check my description, it's clean as a baby's ass. It's just shining. Nothing is there. I don't sell any courses because I'm not some kind of guru that I can influence you to take my trades and stuff. I'm not teaching you how to. I'm just telling you how I do it. I'm documenting my own life here. So if you feel like you can, if you have any interest or any, anything that you're picking out of this, subscribe, man. What will hurt you? Just subscribe. This is free knowledge. Okay. This is break and retest at its simplest form. So guys, let's not talk too much because I believe all of you watching this video, you can draw these levels out. Now it's the mental game, and we'll talk on the mental game later, not in this video. Not in this video. This is a special request and I have to do it because I love my subscribers so fucking much. If you guys know how happy I am, when I see a notification you have a new subscriber, I feel like it's my birthday. I'm just happy. I'm just really, really happy. There's a lot of joy in my heart. So I would really appreciate you guys subscribing. Subscribing means a lot to me. And okay, these are the levels that I see on the 4 hour here. These other levels will be better drawn on the 1 hour. Okay, you can also draw levels on the 1 hour because this is a clear level to sell off of it, and that's the market even rejecting right now. I think I've even missed this trade. I think I've missed this trade. Let's go down the 1 hour, guys. Let's go down the 1 hour. We've been doing a lot of 4 hour analysis. Let's look at this on the 1 hour. Good. Are you seeing? Are you seeing? Okay. I will not say anything. It formed, broke it. It's going to retest or not? This is it now. You just wait for the first black candle. This one, I don't like this one. I don't like this black candle here. It's not looking good. The second one is looking good. That's a pin bar. I don't know what they call it. Okay, this is a good black candle here. Looking nice. Are you seeing this black candle? That's a bearish candle right there. That's an entry signal. The market is telling you it's time to enter. Let's go. You just get in there. Stop loss just above this zone. Don't keep it too tight. We don't trade smart money. Just up there. I'm looking for 1:2, guys. 1:2. Nothing massive. Nothing crazy. And we have it. We have it. 1:2. Perfect up. Perfecto. Perfecto. If you can shrink down your stop loss, you might, but I think this is perfect. If we took it, we didn't take it. I don't know what happened. I missed it. Probably I was just stuck on the 4 hour, and probably I was reading you guys' comments and I missed this. Wow. So you see, just before my eyes. It's okay. It's okay. All right, let's go back to the 4 hour and do our thing. So that's what I'm looking. So you see on the 1 hour here, you see that you are zoomed in the chart. You can even draw out more levels on the 1 hour so you can look for easy scalps. If you're going on the 1 hour to draw your levels, get your entry signals on the 1 hour still. I don't like 30-minute rejections. Take it on the 1 hour. Okay, the 1 hour should tell you that enter the market now. Yes, those are the levels I'm seeing at current pricing. I don't also can start drawing levels in the past 1 year ago. This is what we're looking at current pricing. Let's go on the next pair. This should be the last, right? This should be the last pair. I've lost count. What should we do, guys? What should we do? There's a lot of options and I just get confused. GBP CHF, what a weird pair. Should we do it? Let's do it. GBP CHF bullish market. Sweet. Why? Because I see the market forming higher lows, higher highs, breaking its highs, forming new high, new low, new high. We are bullish. We are bullish, right? Good. Okay. Now, let me clear my charts. Let me clear my charts. My charts are very messy. Let me clear my charts. Oh damn! When I'm recording my charts, this trading view is really slow. When I'm recording, I don't know. It's like my RAM, my memory is very small. The memory of my laptop is very small. I need to upgrade. Okay, here we are, guys. Let's zoom in. Recent pricing. We don't need prices yesterday or last year. Here we already know what to do. Every lame trader will know what to do here. Buy, of course. Of course, here we're buying. Why? Because the market has formed this level, broken it, and it's coming back for a retest. Right here. We just stretch this out and we wait for a good rejection at the 1 hour. And we try our luck. If it doesn't work out, no problem. This strategy is not holy grail. There's no 100% strategy. But you just need to understand market, understand price action, and understand support and resistance. If this level here breaks, we're looking for a retest from it to get our money back that we lost trying to buy it. As easy as that. Because if the market is going up in an uptrend, it's more likely that the market would want to reverse for a bit or for a short-term pullback, then continue to move to the upside. It's better to buy low and sell high. I mean, if you studied economics, you should understand that. Okay. So we see here, if we lose money here, trying to buy this market on the 1 hour, then no problem. We stay relaxed. We accept losses. It's part of the game. Okay. When you lose, there's something you don't know what you're doing. It just wasn't a good trade. That was just not a good trade. You just keep your level there, maintain your level, maintain your stand, maintain your grounds. The market comes back to retest it from the downside. Let me just put this let me just draw this real quick so you understand what I'm saying. If you try to buy that market and it fails you, don't worry, the market will give back your money one way or the other, because this pattern will happen. If it breaks it, this pattern will happen. You feel me? And you take your money here plus extra. And if it even breaks and retests here, you can even look for 1:3, because I see some lows here. You can grab this straight from here to down here, which is good. You grab your money plus your extra 2 profit and you record it. Guys, even if it's $100 account, trade it. If you've not really traded for long, I don't think you should go into prop firms now, guys. Don't go into prop firms, because even if you pass the challenge, pass the verification, you will lose that account if you cannot control your mind. Because when there's so much money, there's a lot of thinking, there's a lot of nervous. You are very, very nervous. You're very, very emotional. So when you put on trades like this, when you get in a trade, I suggest you go and watch your trades maybe on a daily or on a 4 hour. Watch your trades from those time frames. Since they are large, you won't be seeing a lot of price action up and down, and it's getting you so emotionally attached. Okay, guys, well, this video is going to come to an end. If you like this session, if you really enjoyed it, I will be doing a beginner's guide. I don't know if there are beginners here. I'll be doing a beginner's guide, like 30 minutes long. I'll explain everything, Forex, how to get it started, the platforms you should get, and everything from scratch. If you are new to this, if you are not, probably that video will not be for you, but I'll keep dropping breakdowns like this for the intermediate traders and the professional traders, so we can share ideas. If there's anything else you're looking at on this pair, please comment down below. I might have missed something. I love you guys so much. Please subscribe to my channel, like this video, and tell me exactly what you thought about this session. Thanks for watching. Let me start my video. Oh, please God. Okay.